every time
Good evening, good evening, good evening, everybody. Good evening. How y'all doing? Hopefully everything is going well. Dent, I'm back. Dent. Uh-oh. I ain't got my I ain't got my camera on. Have if I turned my camera on, wouldn't it? Hey, how y'all doing, good people? Good evening, good evening, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who this clean shave face person is here, going back to the goatee, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo español. And you are now in tune to, I didn't point at the spot, I don't think. I think I pointed at that time right there. There you go. You're now in tune to the intraday price action recap. Might have if I showed the slide when I said that, huh? It might help a little bit if I showed the slide when I said that. How about that, Till? You done shaved off your beard and you don't even know how to show the screen properly. Good evening, y'all. How y'all doing, man? What's going on? Hey, how y'all doing? Who got up in here? Who we got up in here? Got Jim up in here. Got Lump up in here. Got Yolanda. I see Here to Learn and Share. I see Kim. Man, I got a big old bump on my head right now. That thing's so. Sarah up in here. Brand new. My son cut his dreads today. Today was the day. He said he was going to cut his hair. I said, when you cut your dreads off, I'm cutting off my beard. I started growing my beard May 2021. I never let it get like really, really. I didn't want like a super long beard. I've never wanted that. I've grown a beard a few times. I always kept a goatee, right? And I've grown a beard a few times. And so I started growing my beard May 2021. Right after I retired, I had a goatee. Then I started letting my beard grow in May. I retired April 30th, 2021. Right. And I just always kept it shaved to a certain length. The way y'all see me all the time, I kept it shaved to a certain length. I ain't never let it just get really long. I ain't want one of them big old ZZ top beards. I ain't want that. But and so I was growing for since May 2021. Right. So was that 4 years? Right. And so he had been growing his dreads for I think he said 6 years. This June, like June, yeah, June. It was either June or July. He started growing them. So 6 years he was growing his dreads. Right. He started out with like a fro hawk. He had like a mohawk on the top. Then it went to a fro. Then he started growing the dreads. And then my wife cut him and he had to start back over. And it was still like a fro hawk. It was a fro. So he had like the hair was short on the side and the dreads was long on the top. And then he started letting the sides grow. And so the dreads on the side had got down to here. And then the dreads on the top was like down to the middle of his back. So it was uneven. So then he cut all the dreads to the same length. So all of them was like shoulder length. And then they had got back down, like all of them had got back down to like the middle of his back, like in between his shoulder blades when he was cutting it that day. That's how long it was. It was hanging back down to the middle of his back again. And then so he cut them off and put them in a Ziploc bag. What that? Bring that bag here with your dreads in it. I didn't keep my beard. Bring that bag with your dreads in it. I ain't keep my beard. I was gonna keep my beard, but I was like, nah, I ain't gonna keep it. I was just flat. I wasn't gonna keep my beard. I wasn't gonna keep my beard.
Is it hooked on? Can I step in?
Yeah, you can step in. Just come around the thing right there. Matter of fact, stick your face in here. Like, come step around. You got on a green shirt, so you might. Oh, no, you might be floating. You floating. You floating. He got a see. There you go. Bend down. There you go. He floating. He got on the green shirt. But yeah, he cut the locks. He cut the locks, them man. He cut the locks, man. I can get me some locks. I can get me some locks. Get me a side pony. Get a side pony, one side pony. The locks, them man. Yeah, man. But he didn't cut them all the way down to the root. He cut it down to
start growing out.
He looks very nice. It looks very nice.
Thank you. Here to leadership.
Yeah, he cut it down. He had the little Craig Mack. And then he went and got the temp fade at the barbershop. He told me he wanted to be combed out. He told me he wanted to look like he had the microphone head.
This right here.
Like he told me his head look like you are. Hey Timothy, where you going? Oh no, well, just go to
yeah. Get a little curl pattern back at the start.
So yeah. Oh no, we can't breathe. Oh, you probably should write the date on the side of the pack. Yeah. Just tuck it back behind the guitar. Yep. Appreciate it. All right. Story time over. Now, oh look, where your picture went? Your picture of you and Keyshawn disappeared. All right. Did Price?
No, I probably switched. I just switched from my phone to the desk.
Oh, okay. Yeah, that's probably
maybe that made a difference or whatever.
Yeah, probably what it is. Did Price do anything today that caught anybody off guard? Like, did it do something that made people say, whoa, wait a minute. Why did Price do that? Wait a minute. Why did Price do that? Hey, question for the The gang. Well, the diamond members, the diamond members. How many diamond members we got up in here? How many diamond members we got in here? You lost big today to Black Al Davis. You lost big today. What caused you to lose big today? The Black Al Davis said, who else lost big today? What caused you to lose big today? Let's talk about it. How many diamond members we got in here? If you're a diamond member, put a 1 in the chat. If you're a diamond, I got a question for the diamond members. I have a question for the diamond members. If you are a diamond member, I broke my rule and moved my stop loss and then revenge traded. You know what? It happens to the best of us. If you are a diamond member, put a 1 in the chat. It happened to the best of us. Yesterday was my day. Guess what I did yesterday? Well, I'll tell you. Yesterday, I was trading, going ham in a eval account, right? Going ham in an eval account, just trading left and right, putting on 1, 2, 3 minis, putting on 1, 2, 3 minis, just trading up, trading down. When like I had bought some eval accounts for 90% off when Apex was running at 90% off. So I'm going ham, going 1 contract long, 2 contracts short, 3 contracts long, 2 contracts short, just going ham, up, down, just trying all kind of stuff, right? Cause me, I like, you know what I'm saying? Like when I be trying stuff, like if I get evals at like 90% off, I'm like, it ain't nothing but $15. So I be going ham. So I'm sitting there trading, just going crazy. And I look up at the P&L and I see it say negative $3,000. I say, man, this thing, it ain't supposed to let me get negative $3,000 on no 25K account. I wasn't in no eval account. I was in my live account. Pissed. I'm talking about, I'm going ham. I'm trying all kind of stuff. I'm just going crazy. Pissed. I just got up. I couldn't even get up from the computer. I just closed out my Ninja Trader and sat here looking at Country Wayne videos. And then I say, you know what? I'm not going to trade in my personal account until the sting of this mistake goes away. Yes, real money. Until the sting of this mistake goes away. Because I'm going to be thinking about that $3,000 and I'm going to be trying to get it back. I'm going to be trying. And the way I trade my personal account is totally different than how I trade evals and stuff. With my personal account, I be trading like the MNQ, you know what I'm saying? I be trading MNQ. I be going for like little small base hits. You know what I'm saying? I don't be swinging for the fences in my personal account, right? At all. I don't be swinging for the fences in my personal account at all. I don't even swing for the fences in funded accounts. But when I be in like the eval accounts, oh, I be going ham. Yep. That was my day yesterday. So the Black Al Davis said he got faked out today. Oh, I see a few ones in here for the diamond members. This is my question. Tomorrow is with the first Wednesday of the month. So we have a lecture I got too many channels over here. I have a lecture coming up. Right. Talk about IPDA. Question. Right. Question. I had a thought today that instead of doing a lecture on IPDA, would y'all like to take a deep dive and back test this 15-minute fair value gap strategy that Michael shared on his Twitter yesterday? I think it was yesterday. Yes. I think it was yesterday. He shared something on his Twitter about trading close proximity 15-minute fair value gaps for like intraday trading, right? And I went on there last night, I think it was, and he was sharing some more information, but it was like so many tweets, I didn't feel like reading through it all. But I said, there seems to be something here. There's some meat on this bone. So, y'all let me know. Do y'all want to do the lecture on IPDA, or do you want to do a live back testing of the 15-minute, the trade in the close proximity 15-minute fair value gaps? Let me know. If you want to do IPDA, y'all can't hear me? Oh, sounds good. Golly. When I saw sounds good, I thought no sound.
I'll go with the back test for 15 minutes.
If what I was about to say was, if y'all
I'll just put my vote in ahead of time.
If y'all want to do the IPDA, type IPDA in the chat. IPDA. If y'all want to do the back test in the 15-minute fair value gaps, type FVG in the chat. Fair value gaps. FVG or IPDA. IPDA. Which one do y'all want to do? What do? All right. I see. I see one IPDA. I see two fair value gaps. I see a yes, please. I see a that's right. And I see a FVG. All right. So based off the people that's here, the FVGs are winning. And based off the fact that the person who put in the suggestion for IPDA says FVGs, I'll say we're going to do the FVGs. It's all about democracy in the gang. And then we got Rhonda Green pulling up the rear with the FVG last minute vote, because we're gonna come back to IPDA. Yeah, we gonna come back to IPDA. We might as well just go ahead and get the fresh and new. Is that Venom? Is that Venom? All right. Let's see if we can figure out what made Al Davis move his stop trading Microsoft and revenge trade. So Black Al Davis, do me a favor. There's a link pinned to the top of the chat. It's the link to the Zoom. Do me a favor. Click that Zoom link and then pull up and explain to me what a goings on. Right? Explain to me what a going zone. Black Al Davis. Click that Zoom link, right? And pull up in the Zoom and sprechen Sie English so we can help you figure out where you went wrong today. We can try to help. We can walk through the price and help you figure out how not. Well, I can't do nothing for the moving to stop. That's you. That's just, you ever heard that old Run DMC song from the 80s? Dum, 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 the dum, dum, the dum, 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 dum. Yep. Revenge trading. Can't help you with that. You ever heard the song by E40? Tell me when to go. 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 Dum 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 dum. Ooh. Can't help. I was expecting bearish to begin with. All right. You was expecting Black Al Davis. You can't click on the Zoom link and come talk to me. You know, the weird awkwardness of me waiting for you to type is like off-putting. You make me feel like you don't want to hang out with me. You working? You ain't working. How you working and you doing all this YouTubing and typing? Man, tell you what. Try to go out your way for people and then they hit you with the I'm working. I'm working. I'm working. Give me let's go over here. Microsoft, MSFT, MSFT, MSFT. Yeah. This is a daily chart of Microsoft. This is the daily chart of Microsoft. The Black Al Davis. The Black Al Davis. NQ Micro. Wait a minute. Where did I get Microsoft from? Oh, so you were saying micros. You didn't mean to type Microsoft. Man, what in the haberdashery and hemoglobin you had going on? 900 on micros? Hold up. Let me stop sharing my screen. Let me stop sharing my screen. Come here. Come here. I almost call you by your real name. Black Al Davis. Come here. Come here, Black Al Davis. What in the haberdashery and hemoglobin was you doing to get down 900 trading micros? 900. Black Al Davis, do you realize to be down 900, you had to, that's like 450 points. So were you DCAing? Was you like dollar cost averaging trying to dig yourself out the hole? Were you dollar cost averaging trying to dig yourself out the hole to Black Al Davis? 7 contracts. How many trades you took? How many trades you took, Black Al Davis? Revenge trade, 3. 3. Now 100. Golly. I don't mean to kick a dog when he down, but I don't mean to kick a dog when he down, Black Al Davis, but golly. Let me share my screen. Hey, these are jokes, y'all. These are jokes. These are jokes. These are jokes, man. Y'all know how I do. Let me share my screen now. Now, like I say, I can't do nothing for the moving the stop. I can't do nothing for that. Can't do nothing for the revenge trading, right? There, nobody can fix that but you. But when it comes to you were thinking bearish, right? What's the higher time frame overall, high, like monthly? On the monthly time frame, what's the overall narrative right now? What's the draw on the overtime monthly time frame, right? Overall monthly time frame. High 90,000 foot view. Right? 90,000 foot view. Let's go to the continuous contract so we can see it better. NQ1 exclamation on trading view, if you don't know. All right. So 90,000 foot view, that's the monthly chart, right? Monthly chart is 90,000 foot view. What's the draw on liquidity right now? The Black Al Davis. What's the draw on liquidity right now? 90,000 foot view on the monthly chart. Type it out. Why do I want you to type it out? Because when you type it out, or when you talk it out, if you wasn't working, you could talk it. Working, you could talk it out. But what's the overall monthly draw? Buy side liquidity or sell side liquidity? What's the monthly draw right now? Buy side liquidity or sell side liquidity? Okay, I'll take that. Relative equal highs. We're drawn toward buy side. So if your 90,000 foot view is drawn toward buy side, right? What do we always say? It behooves all traders really, but like beginner or intermediate traders, it behooves you to only trade in the direction of the higher time frame bias, right? The higher time frame draw. Okay. It behooves you to only trade. So with that being said, your 90,000 foot is bullish, right? So let's do this right here. We're going to put here, sit this over here to the side so it's out of my way so I can type. And we're going to say the monthly chart equals we're going to just say buy program, right? Monthly chart is in a buy program, right? Meaning it's currently bullish, right? It's currently bullish. It's in a buy program. Weekly chart. Let's drop these down. Now let's go to a weekly time frame. 1 week, right? So now, looking at our weekly chart, right? The weekly is currently in a buy program. Target is the exact same relative equal highs as the monthly. Okay. So the weekly chart equals buy program. All right. One side note of the weekly, well, we'll get to that in the daily chart, right? All right. Weekly is in the buy program. Right. Let's go down to the daily chart. Go to the daily chart. Una dia. The daily chart is in a buy program. The exact same target. Why do I keep saying the exact same target? Because as you go down in the time frames, right, you can be in a buy program or you can be in a sell program. The target may not be the same target. We may be like when we were here on the daily chart, right? When the daily chart looked like this, when the daily chart looked like this right here, the daily was in a buy program, but the target was here and the monthly target was there. So the target there can be different targets. Okay, you can have different targets. Okay, get out of here. Now, the daily chart, right? The daily chart is in a buy program, right? Now, since we're in the daily chart buy program, right? We're going to add on another qualifier, right? We're putting on another qualifier. Plus, we are on the right side of a market maker buy model, right? On the daily chart. Not only is it in a buy program, we are on the right side of a market maker buy model. Okay. So your 90,000 foot view, the monthly, is in a buy program. And the draw is the buy side liquidity, right? What lets us know it's in a buy program, Tim? Don't just throw these terms out without helping people, right? We are pushing through premium PD arrays like highs and bearish fair value gaps that's above us in price. And we are being supported and pushing through, right? The down close candles. We're pushing through the down close candles are supporting the price. Okay. Right. We're pushing through the up close candles and being supported by the down close candles. This down close candle, respecting it with the bodies. Traded down to these down close candles, rejected off of them. Push through these down close candles right here, close up above and at the top of them. Right. So we're in a buy program on the monthly and the draw is there. Same thing. That's the 90,000 foot view. The 60,000 foot view, the weekly, same thing, buy program, right? Respecting discount PD arrays, pushing through premium PD arrays, right? When prices below these bearish fair value gaps, we're pushing through them, right? We're trading down to bullish fair value gaps and bouncing off of them, trading into down closed candles, bouncing off of them, using that support. 60,000 foot view is in a buy program. Right? 30,000 foot view on the daily buy program, right? And we're on the right side of a market maker buy model. Now that we can identify that we're on the right side of the market maker buy model, we want to go a step further and say, where is price right now in this market maker buy? We're at a stage where we anticipate it to be accumulation. We're at a stage of accumulation. What happens at accumulation? The algorithm engineers liquidity. So if we're at a stage of accumulation, right? I see a word that is the death of so many accounts. I'm going to put it on the screen. I just saw it pop in. It said, I thought. I ain't even going to read the rest of the comment. I don't know what the rest of the comments say. Y'all summarize the rest of the comment for me because all I saw was I thought. That has been the death of, I thought I was trading in an eval account yesterday. I was trading in an Apex account yesterday. I thought will be the death of many, many more accounts in the future. Timothy Lee Rogers Sr., the Black Al Davis. We are not the first, and we will not be the last. Trust me, right? So now that we know we're on the right side of a market maker buy model, right? It behooves you to only be looking for an opportunity to buy in a discount. Why is that? Because the 90,000 foot is in a buy program. The 60,000 foot is in a buy program. The 30,000 foot is in a buy program, and we're on the right side of a market maker buy model, right? Since we're on the right side of the market maker buy model, that means the algorithm is making its way back to some liquidity that it engineered at some point in time, right? At some point in time, it engineered some liquidity. It fooled someone to think that this is a double top, right? It fooled someone to think that's a double top, right? Just like they was wrong here. They said, oh, look at that double top, right? I'm going to go short. And then they got took out there. They said, oh, I was wrong. That's the double top there. That wasn't the real double top. That's the real double top. You're all wrong. The algorithm is engineering liquidity. This is an area of accumulation, right? That's an area of it's accumulating buy stops and sell stops, right? It's accumulating buy stops and sell stops, right? So we're on our way back to buy side liquidity. You're on the right side of a market maker buy model. So it behooves you to be looking for reasons to buy in a discount. Now, right? The daily time frame, we're at an area of accumulation. When we're at an area of accumulation on a daily time frame, we're waiting for more information before we make like decisions of like swing trading and stuff like that, right? We defer to intraday trading when we're in an area of accumulation. We're intraday trading. Now, I'm just going to drop this as a daily time frame, right? So I'm going to drop down to an hourly time frame. I'm just go down 2 time frames, right? I'm going to drop down to a 60-minute, right? Looking at the 60-minute time frame, right? Squanch it all the way up, right? Remember, this was our area of accumulation here, right? Let me go back to 30,000 feet so that you can see it. See, remember that little area over there we talked about? We said we was in an area of accumulation right there. That's that area on the 60-minute time frame. That's that area on the 60-minute right there, right? So that whole little area there, that's all those days, right? That's all them days we've been sitting up there accumulating. Price has been accumulating, right? So this is the area that we've been accumulating in, okay? So today's price action, let's highlight today's price action. We're going to go from 6 p.m. on Tuesday, right, over till, there you go, right now. Right. So that's today's price action right there. Let me go and I'm gonna knock off what we already started, so I don't have any confusion. Okay. This is today's price action over here on the end. All right. So now let's squanch up the chart. Well, we ain't got to squanch it up that much because we know we're inside an area of accumulation. All right. So, but before we move forward, right? Well, now we just start here. It's fine. Right. When we look at where price was when we started today, This is where price was when we started today, right here. Okay. Matter of fact, let's put a line on the opening price, right? That's the opening price right there for today. That's where it started at, right over here. That line there. It's today's price at. Let me make it thicker so we can see that. Make it darker. Okay. That right there. That's the opening price for today. Right? Today's open. Okay. Now, we already said we was in an area of our 30,000 foot. We was in an area of accumulation, right? We was in an area of accumulation on our 30,000 foot view. Okay, so we're deferring to intraday trading. Since we're deferring to intraday trading, right, we're looking to be inside of a bullish dealing range and look for an opportunity to buy in the discount of that bullish dealing range. Why is that? Right? The 90,000 foot is in a buy program, drawn toward the buy side liquidity. The 60,000 foot is in a buy program, drawn toward the buy side liquidity. The 30,000 foot is in a buy program, drawn toward the buy side liquidity, and is on the right side of a market maker buy model, and it's in an area of reaccumulation. We've gone through several layers. We've had a smart money reversal, a low risk buy, a first stage of accumulation, a second stage. We're at a second stage of reaccumulation now, right? We're almost at the finish line, right? So we don't want to try to trade against the grain, right? Because the algorithm is showing us that it's bullish. Okay. So now, what are we looking for? We're looking for a bullish dealing range, right? That has the opportunity to give you a chance to partake in the discount, right? So when price, let's just knock off today's price action, right? Going to knock off today's, this is what we, boop, right here. This is what it looked like last night at 550 at 5:59 before the market opened up, right? This is where we at right here at the open. Right here where price is, right there, right? You want to look back and see the dealing range that you're inside, right? The largest dealing range that you want to see where you are, the largest dealing range that you're in off rip, right? So when you look back to the left, right, you see that high right there is the highest high from where you are that took out buy side liquidity, right? Since that high took out buy side liquidity, it created a new liquidity pool up there, right? Let's get rid of this big circle out of the way. Don't need that. So we created a new liquidity pool up here, right? So that right there is the top of our dealing range, right? When we look to the left, right, we see that this low right here is the lowest low from where price is right now that took out sell side liquidity, right? Since that low took out sell side liquidity, what did it do? It created a new liquidity pool down here, right? So when you create a new sell side liquidity pool, you create a new buy side liquidity pool, you create a dealing range, right? This is a bullish dealing range, right? What makes it a bullish dealing range, Tim? Because the price is expanding or displacing upward, right? We took out sell side and then we took out buy side. So you're inside a bullish dealing range right here, right? Oh, I want to be, since we're in a buy program, and we're on the right side of a market maker buy model, I want to be in a bullish dealing range that offers me an opportunity to trade in the discount. Oh! So when you look at this, you take your Fibonacci, run it from the low, run it to the high, right? Where is price? Price is here. Dag nabbit, Tim. It already gave an opportunity to buy in the discount of this dealing range. I missed it. No, you didn't. Right? So we come over here, we come further. Okay, we've offered a discount to this dealing range. No harm, no foul. Right? So we come over here. We said that this high took out a look out buy side, right? Right there. This high took out buy side. Okay, that's a new liquidity pool. Oh, look, boom, there's a low that took out sell side. New liquidity pool. Oh, I got a dealing range over here. What's the problem? I see the problem. This is a bearish dealing range. Wah, wah, wah. This is a bearish dealing range. We took out buy side, then we took out sell side. It's going down. I need to be in a bullish dealing range. Wah, 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 wah. I can't trade. Hold on, little Timmy Rogers. Don't get upset yet. Where are we in price? We're here, right? If we look to the left, there's a low that took out sell side. Ooh. Look to the left, right there. I don't have any highs. Well, what's that right there, little Timmy Rogers? Did this move come up and take out buy side liquidity? Yes, it did. So when you came up and took out buy side liquidity, what did you create? I created a new liquidity pool. Oh, look, I have a bullish dealing range. I got a bullish dealing range. Oh, look, it's a bullish dealing range. So I run my fib from here to there, and then now I just need to wait for it to come to a discount. No, hold on, little Timmy Rogers. Hold on, little Timmy Rogers. You're forgetting something. You're forgetting something. Look, right? When you traded here and took out that low, you created a liquidity pool. When you traded here and took out that high, you created a liquidity pool, right? That gave you a bullish dealing range. There. Look, you've already come to the discount of this range right here. So price has offered a discount to this bullish dealing range, and it's left that area. So now when it left that area, what did it do? It expanded the dealing range. Okay, when you expanded the dealing range, now you have a price leg here, a displacement leg inside this dealing range, right? Where now you can look at price to see if price wants to come back to a discount and offer you an opportunity to trade. But wait, little Timmy Rogers, right? You also want to remember that you have a balanced price range right here, right? So when you got a balanced price range, you don't want to see price digging way down inside the balanced price range. So you can adjust further and just look at for when price left this balanced price range, right? Right here. This is the top of the balanced price range. And from this candle here up is when we left the balanced price range, right? So now you got a bullish dealing range, right? And you're looking for an opportunity to partake in the discount. Why? Because the higher time frame is in a buy program, Where my little notes go? There you go. The 90,000 foot view, right? The 90,000 foot view, the monthly, it's in a buy program. The weekly, let's go back. 90,000 foot view, buy program. 60,000 foot view, buy program. 30,000 foot view, buy program. And on the right side of a market maker buy model, right? And since we are in an area of accumulation, we're deferring to intraday trading. So we haven't seen anything that says bearish. We haven't seen anything that says sell algorithmically. We don't want to think because we do something or did something or at a price or what Jim Cramer said on CNBC or what our favorite guru said on TikTok or YouTube, anywhere on Al Gore's internet, right? We want to look at what the algorithm is showing us, right? And then now let's go back down to 5 minute time frame, right? And we are going to look. Oh my goodness, look! Oh my goodness, look what happened! Look what happened! And I drew this out without the price being on the screen. Look what happened. Somehow, for some reason, price came down below this magical Fibonacci tool that I drew. It came below that 50% line, right? Came down, took out some liquidity, and then it blasted away. I wonder why it did that. Could it be because our 90,000 foot view is in a buy program? Our 60,000 foot view is in a buy program? Our 30,000 foot view is in a buy program and on the right side of a market maker buy model and in a second stage of reaccumulation. And then when we get to our intraday time frames, they're also in buy programs and they're respecting the higher time frame narrative. And we see it play out algorithmically where we come to the discount of the latest expansion leg off of our bullish dealing range here, right? Remember this bullish dealing range that we drew out on the 1 hour time frame? Bullish dealing range. This is the area that offered the discount already, right? This is when we left that balanced price range right there. We came back down into a discount of this area here, taking out sell side liquidity, and then nothing could stop me. I'm all the way up. Right? So nothing about price was saying try to sell, right? Nothing about price was saying try to sell. There's nothing that we can do about losses incurred today because we were trying to sell. The only thing we can do is go back and do the same thing that we should do every day. Start from the top. They call it TDA, top-down analysis. What's the higher time frame telling me? What's the next time frame down? What's the next time? Whatever time frames you choose to look at. If you go monthly, weekly, daily, 4 hour, 1 hour, 15, 5, 1, if you go monthly, daily, 1 hour, 5 minutes, if you go weekly, 4 hour, 15, however you do it, what does my highest time frame say? What does my next time frame say? What does this time frame say? Are all the time frames aligned? Are all stars aligned? Do we have all buy programs? Do we have all sell programs? Am I in a discount if it's in a buy program? Am I in a premium if we're in a sell program? What does the algorithm tell you? And that's what you should be doing. Now, this teachable moment has been brought to you by Back to Basics. Back to Basics video series. A pre-recorded video series that will be available to the gang free of charge. If you're not in the gang, meaning
you did not sign up for the private Discord through WAP before May 27th, 2025, you will have to pay for this video series. It's going to be all inclusive. Anything that, and I just spit on my mantra, anything that I've ever talked about on this YouTube channel, be it investing, be it what is the stock market, be it what is a candle, be it what is the open, high, low, and close, be it what is a future, be it what is a contract, be it what is an option, be it what is a share, be it how do you day trade, be it how do you swing trade, be it how do you invest, be it how do you do an IRA, be it how do you open up a brokerage account, be it anything that I've ever taught. It will be inside this video series. From start to the end. From the start to the end. You know what I'm trying to say. Gang. You'll have access to it for free. None gang. You will be paying for it. It won't be expensive. Won't be expensive at all. Won't be expensive at all. I promise. It won't be. Now, let me give me a sip of water. And then that's probably gonna be it. I don't feel like talking about price no more. Anybody got any questions while I get me a sip of water? Monica. I'm just some dude from Fort Lauderdale, Florida. I am not a king. I am not I'm not a part of any type of the only royalty I'm part of a royal priesthood because Jesus Christ is my Lord and Savior. I'm part of a royal priesthood, but I am not a king. You know, I appreciate it. I'm just a guy from Fort Lauderdale, Florida, that you know, share his thoughts on this thing that they call price action on Al Gore's internet. So the Black Al Davis, right? There's nothing wrong with trading against the grain, right? You just have to. You got to be jack, be number jack, be quick if you're going to trade against the grain, right? But if price is bullish, if price is in a buy program, you want all the time frames to align to a buy program and look for opportunity to buy in a discount. If price is bearish, you want all time frames to align in a sell program and look for reasons to sell in the premium. That will aid you in taking better or more quality setups that will help you with being on the right side of the trade, but ain't nothing gonna help with moving your stop loss, right? We've all done it. Don't beat yourself up. We've all been dumb, right? Ain't nothing gonna help you with revenge trading. We've all done it. Don't beat yourself up. We've all been stupid. Other than that, go through the charts, look for algorithmic signatures. Forget I thought, forget I want, forget. Y'all hear me say all the time, hey, this is what I want to see, but I'm just waiting to see what price do. I want to see it come down here. That'd be healthy price action, but I'm just going to go with whatever. And I'm glad you said that. I normally have a 15-point stop loss. Stop doing that. Stop doing a set stop loss, right? Do not do a set stop loss, right? You want to put your stop based off of price action. Well, Jim, how can I do that when I can only risk a certain amount of money? Well, guess what you're going to have to do? You're going to have to start dropping down in them time frames so that you can frame a trade based off of your risk tolerance, right? Let's come over here. It don't matter what model you use. Risk tolerance, risk management is risk management. I don't care what model you use. You want to put your stop in accordance to market structure. You understand what I'm saying? Every entry got a place where you supposed to put your stop. If you trade off a fair value gap, you got a mandatory stop. You got a safe stop. Right? If you trade fair value gap, you get in on that fair value gap, your mandatory stop is below the low of that fair value gap, right? Your safe stop is below the swing low. Right there, you got a mandatory, you got a safe. Now you can freak it and move it in between. You can say, okay, I'm gonna go below the low of this candle, but as long as it's below that low of that fair value gap, right, you can put it where you want to put it. And then if below that swing low, you put it, but then you got your mandatory stop, you got your safe stop, right? That's just stop placement 101. Right? So we're gonna come over here. Then what we're gonna do? We're gonna look at this morning session. We're gonna go over here to this morning session. We're gonna go to New York. We're gonna come New York, and we're gonna go from 9:30. We're just gonna put it all the way to the end of the day. That's what we're gonna do. We're gonna put the morning and the afternoon. Right? That's the morning and the afternoon session. Right? That morning session, afternoon session. Okay, here we go. So we're gonna look right here. This from 9:30 to 9:30 to 12 inside the red right there. Right? 9:30 to 12 inside the red. Hide that. All right. So put my 9:30 line here. 9:30. That's 9:30 in the morning. 9:30 in the morning. 9:30 open. Right? And if we look here, we see we opened up at 9:30. Right? At 9:30, when we opened up, we are right here, right? At the high of the dealing range there, right? So let's go through, do our work right here. Right? That's where we opened up at 9:30 right there. We look to the left, right? Look down here. That low right there took out sell side liquidity. Right there. Boop. Right? We look over there, same high. Right? So we at the same high. High didn't change. Right? So here we go here. We're inside this range right here. Right? That's a bearish dealing range, right? Bearish dealing range that we're in right there. Okay. So we're up here at the high of this bearish dealing range right there. Right? So now that we're up here in the premium of this bearish dealing range, right? We've come back up here, right, to a premium. We've taken out buy side liquidity, right? We've taken out buy side liquidity, and price is not showing a willingness to sell off. And we're in the premium of a bearish dealing range. It's not showing a willingness to sell off, right? Okay, get it, got it good. So then we're looking to the left, right? Right here, right there, it's 9:30. That low right there, took out liquidity, right? Look here, that high right there at 9:30. Took out liquidity, right? Right there. And what is that? That's a bullish dealing range, right? That's a bullish dealing range right there, okay? So then we look here. What does price do at 9:30? We engage buy side, right, of the dealing range. We come back down, right? Set relative equal lows. Don't take out the sell side, right? Don't take out the sell side. And then what do? We take off, displacing away, right? Fair value gap right there, right? We take off, displacing away. Okay, so come here. Right, got our displacement there. Going to make this right there. Okay. So we come here. If we look right there, as you can see, right, what do we get right here? An institutional order flow entry drill, right? Over here at 10:05, what do we get here? A institutional order flow entry drill off of the same fair value gap, right? Right? You say you trade the 2022 model, right? What do we got here? We come in, right? We engage buy side, right? Come down, take out short-term sell side,
All right, displace away, breaking market structure. Right here, we trade above that high right there, breaking market structure. Right, we come over here, we got 10 o'clock right there, right? Or we got this 950 right there. Both of them are inside of, but that's 1005. Both of these right here are inside the 950 to 1010 macro, but right here on this 950 counter during the macro time, 2022 model, right? Come down, right? We engage buy side first, letting you know that we want to go up. Come down, take out short-term sell side, break in market structure, retrace back down into a fair value gap. This is a 5-minute fair value gap at that. That's your 2022 model, right? You get into the trade, right? You're looking to go long at the fair value gap, right? So now, looking at here, your mandatory stop, right? You want to be below the low of the fair value gap, right? Preferably at the low of the candle, right? This is mandatory. Below the low of the fair value gap, mandatory, right? You want to be here, preferred, and then safe. That's your safe. Now, based off your risk tolerance, right? You come in and you say, this is the most amount that I'm willing to risk on a trade, right? You could put in the size of your account here and this here, and you can say on each trade, I'm only willing to risk this percent, right? If you don't want to do it like that, you can come in and you can put in the size of your account, whatever you want to be, and you can come over here and change this to dollars and say, I'm only willing to risk, you know what I'm saying? I can't speak your account for you, but say I'm only willing to risk $50 per trade, right? So if you say I'm only willing to risk $50 per trade, if I enter in on the high of this fair value gap and I put my stop below, I can put my stop all the way down to here and still take this trade with 1 micro, right? Based off of how much I'm willing to risk on any one trade, right? And based off of proper stop placement, right? I can take this trade, right? I can take this trade and depend on how tight I want to put my stop, below the low, all the way down to this point here, right? That's 24 points, 24 and a half points that I could have on this stop right here, right? Because I'm willing to risk up to $50 on any one trade, right? So I say, hey, I can take this trade here and I can take 1 micro and it's an 18-point stop. I'm risking $36 on this trade, right? I'm risking $36 on this trade. If I come down, if I get picked up here, right? Whatever am I shooting for? I'm shooting for a 2-to-1 trade. This is, I start to retrace back here. I can either shoot that back to that high is a 2-to-1 trade, right? If I'm shooting for 2-to-1, if I, whatever you want to shoot for, I want to shoot for more, whatever you want to shoot for, right? Whatever you want to shoot for, how you want to do it. But this lets you know, based off of proper stop placement, I can take this trade, right? Now, let's just say you say, okay, I'm only willing to risk $25, right? Right. And then if I get in at the high of that fair value gap, I can only come to here, right? What does that mean? That means I cannot take this trade because my stop is inside the fair value gap, right? And I got to allow for price. I want to see the lower portion stay open, but I have to allow for price to wick down into the lower portion of this fair value gap, but I don't want to see it go all the way through it, right? I want it to, this to remain completely open, right? But I have to allow for it. So I can't take this trade because from there
getting in here, it doesn't allow me to put my stop in a proper place, right? The only way I could get into this trade is if it was going to come down that far. And in this case, I wouldn't have got picked up on this trade because it never came to the place where I can afford to take this trade off this 5-minute time frame, right? Then if we go down to a 1-minute time frame and see if we can find something that we could partake in, right? So looking here at the 1-minute time frame, so based off the 1-minute time frame, right, there's nothing. Nope, can't take it because there's nothing in here that I can trade off of based off the model that will let me put my stop in a proper place. So based off, if I was on the risk $25, I couldn't take this trade. No matter how much I wanted to take it, I can't take it because I can't put my stop in a proper placement. And remember, this teachable moment has been brought to you by Back to Basics video series. Coming to a TV screen, monitor, telephone near you in the near future. Anybody got anything for me? That's all I got for y'all. You're welcome. I'll take the silence as a no. And with that, I shall bid you adieu. Gang, Diamond members, right? Tomorrow is Wednesday, I think. Yes, tomorrow is Wednesday. Tape reading at 9 a.m. Tape reading at 9 a.m. We'll be tape reading tomorrow morning, tomorrow night. We will be back testing and diving deeper into the, trading close proximity 15-minute fair value gaps. I'm gonna go back and read through ICT's Twitter feed tonight or maybe tomorrow, and I'm gonna go back and I think he posted a video where he was kind of talking about it or showing how he was executing with it. I'm gonna look at the video. I'm gonna read through the Twitter feeds, get my mind wrapped around what he's saying. Then we're gonna go through the price section and see if we can flesh out something that makes some sense in our trading minds. All right, man. Appreciate y'all for hanging out with me. Like I said, if this is your first time tuning in, I appreciate you, man. Make sure you like, comment, share, subscribe. If you got something out of this, share it with somebody because I'm pretty sure they'll get something out of it too, man. I'm setting my mic back here in the back. Y'all don't mind me. If y'all hear some bumpity bump, and I jalapize. Anyway, man, till the next time I decide to get on Al Gore's internet, share my thoughts on this thing they call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's your big spider if you don't hablo español. And remember, I'm not a bull. I'm not a bear. I'm a freaking beast. Yeah, man. Hey, man, y'all take it easy, man. Y'all be safe out here in these trading streets, man. I'm gone.